If you're turning 65, signing up for Medicare isn't as simple as just enrolling in parts A and B of Medicare. If you're still working past the age of 65, or if you have coverage through your employer, if you have prescription drug coverage through your employer, or contributing to an HSA, enrolling at the wrong time can cost you more money, create and trigger lifetime penalties. And in this video, I'm going to explain all the answers you need to know before you make any Medicare decisions. My name's Mike with Your Insurance Coach. I spent the last 14 years working for a major Medicare Supplement insurance company, and I've helped a lot of agents and clients understand the ins and outs of Medicare. My goal is simple: to teach people about Medicare without all the confusion, insurance jargon, and terminology. The first thing you need to understand is that when you're turning 65, not everyone is going to make the same Medicare decisions. Some people should enroll in Medicare Parts A and B when they're first eligible. Others may be able to delay enrolling because they have coverage through their current job or through their spouse's job. Now, just because you have coverage, that doesn't automatically mean you can delay enrolling in Medicare. The exact type of coverage you have, your employer's size, and whether you're contributing to an HSA or not all matter when it comes to your Medicare enrollment timing. So before you decide to enroll or delay enrolling, you need to look at your personal situation and not copy what a coworker, friend, or spouse has done. The first question I would ask myself if I were turning 65 is, where does my existing or current coverage come from? That question matters because if your current coverage is through your employer or through your spouse's employer, that's treated very differently from COBRA, retiree coverage, or individual marketplace plan like Obamacare or an ACA plan. What matters here is the size of the employer. If your employer has 20 or more employees, generally speaking, that means that the employer's coverage pays first or is primary, and that means Medicare would be secondary to your employer coverage. Not always the case, but that's a good indicator you could likely delay enrolling in Medicare without a penalty. Now, if your employer has less than 20 employees, that usually means that Medicare will be the primary payer and your employer coverage would be secondary. Generally speaking, that means that you're probably going to have to enroll in Medicare when you're first eligible to avoid those timing penalties and delays and gaps in coverage. Now, where a lot of people can get into trouble is they think they can delay enrolling in Medicare Part B simply because they have COBRA, retiree coverage, or an individual marketplace plan, or what we might be better known as Obamacare or an ACA plan. Just because you have COBRA or retiree coverage or an individual marketplace plan, that does not mean you can safely delay enrolling in Medicare Part B. Here's why this matters if you work past the age of 65. When your employment ends or when your employer coverage ends, whichever comes first, that's what's going to trigger the start of what's called an SEP, or special enrollment period. This is an 8-month window after that employment or employer coverage ends where you can safely sign up for Part B without penalty. So a common mistake I'll see is that someone will retire, they enroll or elect to go on COBRA, and they try to sign up for Part B when their COBRA ends. And if it's outside or past that 8-month SEP or special enrollment window, that's going to create all kinds of issues. It could trigger those lifetime penalties, and it could cause timing or coverage gaps because they might not be able to enroll in Medicare Part B right away. They might have to wait until a special period to get signed up for Part B. Another thing you need to be aware of is if you're currently contributing to an HSA. If you are contributing to an HSA, you cannot contribute when you're enrolled in any part of Medicare, and that includes Part A of Medicare, which usually does not have a premium tied to it. And here's where people can accidentally get in trouble with an HSA. If you decide to delay enrolling in Medicare Parts A and B, right? When you do decide to enroll when you're ready to retire, your Part A can be backdated and go retroactive up to 6 months. So if you're contributing to an HSA, you could wind up with what's called excess contributions, and that causes all kinds of tax implications and issues. So if you are going to delay enrolling in Medicare and you're contributing to an HSA, the key thing you need to do is you need to stop your HSA contributions 6 months before you decide to enroll in Medicare. Let's quickly break down what Medicare Parts A and B actually cover. Now, Part A is going to be for your hospital insurance or when you're confined to the hospital, or there's skilled nursing facility benefits tied to it as well. Now, Part A of Medicare is typically going to be premium free for the majority of the population. And one thing that's really important to understand with Medicare Part A is that this $1,736 deductible for 2026 that you see here, this is for every benefit period. And a benefit period is 60 days. So if you're confined to the hospital between 1 and 60 days, you will be responsible to pay that deductible of $1,736. And then if you go back, if you leave the hospital and you go back into the hospital within 60 days, you do not have to pay that Part A deductible again. However, if you go back into the hospital 61 days or later, you will be responsible to pay that Part A deductible of $1,736 again. And that is going to be true for every 60-day benefit period. All right, that's the basics of Medicare Part A. Now I want to walk you through Medicare Part B and the basics of that. I'll show you a similar chart that's going to break this down. But Part B is going to be really like your medical insurance is how you want to look at this. It's for things like your doctor's office visits, your outpatient care, test supplies, things like that. Now, the standard Part B premium for most people, probably 90% of the population, is going to be $202.90. Now, you could pay a lot more than that based on your income. That's called an IRMA. We'll get into more detail on that in a different presentation. But you could also be paying less than that, again, depending on your income. Here's the basics on how Medicare Part B works. Each year, Medicare Part B is going to have an annual deductible. This year, it's $283. So once you pay out of pocket the first $283, Medicare Part B is going to jump in and start paying 80% first for approved Medicare charges. That means you will be responsible for the 20% of the approved amount. And there could be an additional charge on top of that. That's called excess doctor charges. Okay, we'll explain that in more detail on a different presentation. And that's the basics of Medicare Part B. If you like that A and B chart that I showed on the screen, I'm going to put a link in the description to get your free copy of that A and B chart. I provided it at absolutely no cost. You don't have to call me or email me or anything like that. It's there for you just to download as a helpful resource. And now that you have a basic understanding of how parts A and B of Medicare work and some of the traps you can fall into that can cause issues or delays on your timing or cause or trigger those lifetime penalties, let's go into your two main coverage options that will help cover the gaps that you just saw in original Medicare Parts A and B. Here are the two main options that can help fill the gaps in original Medicare Parts A and B that we just went through. On the left, you have option one, which is having original Medicare Parts A and B and adding on an additional Medicare Supplement, also known as a Medigap plan. And typically, you're also going to need a standalone or separate prescription drug plan, also known as Part D, to help with your prescriptions. Your second option on the right is going to be what's called Medicare Advantage. Medicare Advantage plans are also called Part C. These are offered by private insurance companies, and this is an alternative way to receive your Medicare benefits. They combine your Part A, Part B, And usually the Medicare Advantage plan will also include your prescription drug coverage. Sometimes they also have additional benefits for dental, vision, or hearing. What's important to know with Advantage plans that you're probably going to have to use a provider network. And remember that zero premium doesn't mean there's zero cost. There's additional copays and co-insurances and additional out-of-pocket costs when you have a Medicare Advantage plan. We'll cover both of these options in more detail in a future video, but for now, this is a good basics explanation on the two main coverage paths, the supplement, original Medicare. No matter what path you choose, don't overlook your prescription drug coverage. If you go the Medicare Supplement or Medigap route, the Part D or prescription drug plan is always going to be separate, and you also want to shop your Part D plan every single year. You can usually sign up to change between October 15th and December 7th, and your new coverage would start on January 1st. But it's called formularies, but they change every year, and it can affect how much your out-of-pocket costs are, depending on the scripts that you're taking. Usually with Advantage plans, like I mentioned, the drug plan's typically included, but you always want to make sure of that. And when you're leaving your current coverage, you need to sign up for a Part D, even if you're not taking any prescriptions. You can get a 1% penalty per month for each month you could have enrolled in a drug plan, but you did not do so. And that is a lifetime penalty. So that's something you certainly want to avoid. So for my final recap, I would say make sure you know where your current coverage is coming from. If it's through your employer, make sure you're aware of the employer size rules. Remember, 20 or more employees, there's a good chance you can delay Part B without penalty. If there's less than 20 employees, then there's a good chance you're going to have to enroll in Medicare to avoid those lifetime penalties, timing issues, things like that. If you're contributing to an HSA and working past age 65, remember to stop your HSA contributions at least 6 months prior to enrolling in Medicare. You cannot make any HSA contributions while you're enrolled in any portion of Medicare, even premium-free Part A. Lastly, don't leave out the prescription drug coverage. You have to have what's called creditable drug coverage, and if you go more than 63 days without that creditable drug coverage, that's where you could be looking at those lifetime penalties. So remember, even if you're not taking scripts, you need to get a Part D plan. If you like that Medicare Part A and Part B chart that I reviewed today, I put a link in the description to my website where you can download a free copy of it immediately. You don't have to call me. You don't have to submit your information. You don't have to email me. Remember, it's a free resource that I have available on my website for you to have access to. And if you want help reviewing your options, if you're turning 65 or enrolling in Medicare for the first time, you can schedule a call with me as well. But thanks for watching my video. I'll catch you on the next one, and I hope this was helpful. Take care. Make it a great day.